Hello, everybody. This is Anthony for Investors Underground. Today, it's an honor for me to get to sit down and speak with one of the longtime members, mentors, and moderators within the Investors Underground community. I'd like to introduce Mr. Emil Cuzman. Emil has been trading for over 20 years, and for a great number of those years, he's provided nightly watch lists, trade recaps, and weekly review videos for IU members. Emil also provides trade ideas live and on a daily basis inside the IU Momentum chat room. You can follow him on Twitter at KuzmanE. Hello, Emil. Thank you for being here and taking the time to speak with me today.
Hi, Anthony. Thanks for having me today.
Can you maybe tell everybody a little bit about yourself and how you first got started with the stock market and trading?
Yeah, sure, absolutely. Well, all started back in 2000, at the end of 2000, probably. This passion, I have it from my father. He used to invest in stocks. So I remember he was always giving me the financial newspaper. Back then, I didn't have any access to internet. I'm not even sure if somewhere around my area was except the companies and some internet cafes. So the access to information was restricted, obviously, not like these days. But I I started to read the financial newspaper. There was a section with the companies, and I did this for probably like 1 year before I started to get involved in real stock market with real money. I had little money on my name, so my father pointed me, you should invest in this and that. It was basically at the time. I was looking to invest. I wasn't aware of day trading or such things. I've been lucky back in the day because Romanian market where I was active and where I had an account was an emerging market, and also I got this bull run from 2000 until 2007, and basically now when I'm thinking it was most luck, it was basically just rainbows and unicorns because all I did was buy the dip and sell the dip. You probably see this type of trading these days. I mean, in 2020, which is a little bit not funny to me, but I'm familiar with this behavior. So I've been like that. I've been in that boat. I try them all, let's say. And the thing is, when you get used with this type of action, you get so confident that you really know what you do, and nothing bad can happen. And like I said, it was a easy ride. Everything was doubling each year, at least. There were a lot of IPOs, so to get involved too. So when the subprime crisis hit and the market collapsed in 2007, all I knew was by the dip, right? So I was averaging down and averaging down, averaging down. So basically, I almost killed my account. I basically killed my account because I lost roughly 90% of it, and my account went dust. And you know that saying that the you know it's funny. The treatment was a success, but the patient was dead. That's basically what I was. So I ended up with a great average, but the account was done. So I would say that was um that's how I it was the how I got involved in the market and basically how a chapter ended. Let's put it this way. So after that period, I realized that that thing is not going to work anymore. because the market changed the dynamic. A lot of people like myself, I wasn't confident anymore. The money wasn't there anymore, so I had small money left in my account, so I had to find another ways to make money, if you want. So with the money what I have had left at the time, I opened a new account, and basically I went through everything. I went through uh, forex, I went through futures, options, and the stocks, obviously. But it was a difficult process, and I in the end I ended up with trading stocks, but it took me a while until I find some grip on how the price is moving, and understand how the stocks are moving and what the driving factor. So yeah, that probably took me, I would say, from 2008 until 2012, 13, I would say. So it was quite a long time.
There's a lot that I want to ask about there. Starting with your father, it's interesting to me that he sort of suggested to you, and sort of had you look at some of these financial, papers and things like that. So was he in the finance business? Did he trade?
Yeah, he was in the finance business. He used to work for an investment company. So he was kind of involved with the financial sector. So it was easy transition for me because I was, I had a good mentor, let's say. So obviously, in the beginning, I was listening and stuff, but after you get involved, after you get your feet wet, you start to test things, and it really doesn't matter how many times someone is going to tell you something until you are not hitting your head or you get burned. You you are not going to learn, and even then, you are going to repeat the same mistake over and over until it's getting burned in your brain that I'm not going to do that. So, like I said, it was an easy transition, but then the market was helpful. But then, you know, when you think that all, it's going to just um, if you are not paying attention, it's very easy to go down the hill, especially if you are not having a process. You really don't know what to do, basically. And there are a few key points, um, and there are few times, when the market is going to teach you um, the big lesson. Let's put it this way.
Yes, yes. The market will teach you all the lessons that you think you don't need to learn, and
Yeah,
more and
exactly.
more. And so, Emil, were you trading U.S. stocks the whole time? I know you're based in Europe, so were you trading any local exchanges as well, or was it all U.S. stocks at that time?
No, so from 2000 until 2007, it was exclusively just Romanian stocks. And I wasn't even investing in Europe, let's say, because that was what I was familiar with. So it was a smooth transition, like I would say. So yeah, just after, I think the first when I opened an account in 2008, I started to get involved with the US market. I knew even back then that European market it's a little bit slow. And for instance, I was, like I told you, I was getting involved with options, and Europe, they have options for companies, for as a financial. I mean, you can use options basically on big companies, but they do not have, from what I know at least, Right now, I don't have any contact with European market, but even back then, you could not close. I mean, there is no expiration each week, just each month, and you cannot close your position until the expiration. So it's not like you can get out every time you want. So that's what I remember from back then. Right now, I have no idea how it is, um, since I'm trading just US stocks. So that's how I get in contact with US stocks.
Okay, great. And it sounds like you had a little bit of adversity. You had a drawdown period. Can you maybe talk about when your trading started to change and how you got out of that drawdown period and started to turn around your trading?
Yeah, it was a journey, man. That's a fact. Um, during these 5 years of trial and failure, I blew up probably 5 accounts. Um, Most of them small because, like I told you, had some money left from the account that I blew off, but those money burned pretty quickly. So every time I had to go to work, get some money, and then started with small amounts like $3,000, three, four, $5,000 each time. So I think everything started to shape up and get some traction in 2013, pretty much. So it was, I remember back then that was the marijuana craze stocks, every MJ stock started to run. So there were a lot of opportunities, long and short, both ways. And that's the moment when I managed to, like I said, get a little bit of confidence and grow my account and really get above PDT to be able to, um, to um, use more leverage and be be more flexible. Let's put it this way.
Was there anything in particular about your trading style that changed, that allowed you to go to the next level? Were there habits that you were breaking? Was it a change in your trading psychology, a change in your strategy that really had you improve your trading?
Yes, I mostly started to get familiar with the setups that were running at the time, and I started to, you know, I used to have this issue of not respecting the plan. I had a plan, and then due to emotions, I wasn't respected. I got shooked out many times, and then the price went where it should. Uh, so without me, obviously, so I had these type of issues. But I think these are issues related to confidence, and I think this is a big aspect in any trader playbook. Um, and confidence is going to come, I think, when you have a little bit of screen time and you start to respect the plan and not let emotions get out of your hand. I think it's a big thing, and probably this is one of the problems that many beginners have. So I would say this is something that shifts my trading and put it on the right path. Um, and yeah, pretty much that's what I was doing to get more traction. And also opportunities were there, a lot of opportunities, day in and day out. But everything is cyclical, You, as you can see, you have periods of a lot of action, then slowing down, then the action is going to come back. So yeah.
What type of stocks at that time when you were first learning to trade through when you first started to see success, what type of stocks were you trading? Were they small caps, mid, large caps? And were you going long or short the majority of the time? Was that all the same from when you were just starting to when you started to have success? Or did that start to evolve for you?
No, at the time I was strictly focused on small caps and shorting small caps. I cannot say that the shorting small caps was easier back then because it wasn't. But obviously, it's not like these days. So I was mostly shorting these small caps because if you have a basically what I was doing back then, it was pure technical. So it was enough for me to have a big gap and then some sort of a setup. I was watching back then to take a position into it. Now these days it's more games, involved. And also you have to be aware of a little bit of the fundamental stuff. And also back then the borrows were pretty cheap, and most of the stocks, even these small caps, were easy to borrow, like 2013 up to 2015, I would say. Then brokers started to charge more for this, and everything started to be hard to borrow, and you have to locate them. So yeah, it was mostly small caps back then.
Okay. Yeah, that sort of leads me into the next topic that I wanted to talk about, which was sort of the evolution, not just in small caps and like you had mentioned, finding locates these days is a bit of a could be a little bit of a process where maybe 5-7 years ago, like you were mentioning, it was a lot easier. So the evolution, not just of the stocks that you trade, but can you talk a little bit about the evolution in your trading? So what right now, in the modern times, is your trading niche and your strategy?
Yeah, right now I'm I could say that I'm pretty diversified. So I'm using multiple setups, obviously, but I would say that 80% I'm still shorting small caps. I mean, not 80% of the time, but for instance, I go long small caps too. But the main thing for me is shorting small caps, and then I trade mid and large caps also. But they are different animals. So usually, for instance, I'm swinging, but positions overnight. But there's still things for me to get comfortable. I'm still getting familiar with swinging, for instance. And for me, a swing could be something like 3-5 days. I do not have this patience, to hold too much on a swing. And on big caps, it's I would say that I'm having a fundamental angle, obviously, but it's mostly technical. I put a lot of price and on technical stuff because technical is going to give you. I mean, I'm talking obviously from my experience and what is working for me. So technical, it's for me, always going to be the king, because I'm looking every time I'm taking a trade. I'm looking for the timing. The timing is very important, and technical is going to give you the timing. Many times you have great stocks that they just go down, 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 down. Even the numbers are great. So either there is no interest there or in investing or things like that. So people kind of avoid them, even they are good companies. So they need a catalyst like great earnings, then people start to get involved. So it's for me, even if I know, okay, this company is great, but the setup it's not there for a swing position, for instance, I'm going to avoid it until it's going to have a technical setup. And same things goes to small caps. Small caps. Most of these small caps that myself I want to short them, they have some skeletons in their closet. So they have either dilution or they have some sort of overhead supply from previous times that when they gap. So I'm looking at things like that in order to get involved. And what I can say is that these days it's more difficult to trade them than it was in the past, because in the past probably because not so many people got involved and not so many people were aware of these strategies. But these days the information is very accessible, so people are going to do the reverse math and learn the strategies. So once that people learn new stuff, the edge is going to fade away. So market makers adapt it, and as you can see these days, there is a lot of games during the day, especially if you are going to short something. They squeeze out of nowhere. Back in the days, it wasn't like that. Most of these, if you got a good entry on a big gapper, let's say, it was an all-day fader. You could call it like this. Right now, usually they have a fade early in the day, first half an hour, and then sometimes they play games. They reclaim the pre-market highs and things like that. And it's funny because if you look at the daily chart, it's going to look the same like 7 years ago from 2015. But on the intraday, it's a completely new game. And you really have to be aware of this and position yourself accordingly in order to not get hit by the train, because if you are two sized and you have a poor average and you get squeezed, you are going to be in a poor position. So you always have to adjust. It's more work to do if you want, and you have to keep track of more things in the same time. It doesn't matter if there is supply, they can still play games. They are very, very. There are a lot of factors that are involved in the game. It's not so simple. Like back then, I thought that it's difficult, but now when I'm looking back, it's much easier. If obviously, if you could trade with what you know now, back in the days, but that's absurd. Anyway, now the game it's more complicated. Let's say.
There's a couple of things that you mentioned there that I think could be important for people to sort of think about further. You had mentioned diversification, and I think from the sound of it, correct me if I'm wrong, you mentioned it in terms of having an understanding of how small caps through all the way to large caps trade and how you would approach them to get into a trade. For small caps, like you had mentioned with dilution, that's something in a part of your trading that you developed. Whereas with the large caps, there's something else that you're looking for, whether it's catalyst or for the technical side to really present itself. And you also had mentioned having to adapt and evolve, whether it's from how you trade now to how the stocks move now versus how they did in, say, 2015, and even the sort of role that market makers have. So can you maybe talk about the importance for traders to continue to adapt as the market continues to adapt, and the importance of diversifying, not so much as what your portfolio is in that sense, but diversifying your psychology and your trading setups?
Yeah, absolutely. So, for instance, I have separate accounts for swings and for day trades. So like I said, it's a completely different animal. So I'm always do not try to combine them. And one aspect that I was doing wrong in the past was, like I said, the market is cyclical, so and dynamic, obviously. So sometimes you have a working strategy that it's just smooth, and then it's not going to work. And that's not necessarily because um, the setup it's not working. You are not market, like I said, market is cyclical, so you are not in a good cycle for that setup. So what I was doing in the past was every time the cycle changed, I was trying to fix the strategy, but it actually is the other way around. The strategy was okay. I wasn't aware of the cycle. I mean, so um, it's 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 hard in the beginning, especially to realize that those cycles come and go, and to position yourself accordingly, and to not for instance, during 2020, we had all those amazing breakouts that were working. It was a lot of fresh money. Everybody was buying stuff. It was a booming. So that strategy worked perfectly. Right now, if you are trying to buy a breakout, they still work, few of them, but most of them are going to fail. So are going to be failed breakouts. And if you are not aware of that, and your only strategy is buying breakouts, you are going to end up broke, right? So that's what I did in the past. And without being aware of these cycles, and it's available for small caps and for big caps either. And back in 2020, there are setups that work perfectly. Right now, they do not work anymore. Period. That's fine. Probably they are going to come back at some stage, and those people who are prepared and are going to wait for them. They are going to realize, okay, this setup is back. And the same thing, like the breakouts are going to work again once the market is going to catch up a bit. Nobody knows where the market is going to head, but if it's going to start to put a base and start to perk from here, the indices, obviously the breakouts are going to be more seen more often. And even in this market, if your only strategy is, let's put it this way, is buying breakouts, there are a lot of companies that, for instance, they thrive during the bear market, like energy stocks. Or you have to be aware of the sectors, because some sectors really are hot during a crisis. So once you get familiar with this thing, it's going to be much easier to understand how you position yourself and be more confident to say, okay, this is an energy stock. It doesn't matter if SPY it's dropping. This one is basing for a while, and it's starting to put a narrow range. Probably it's going to break out at some stage. So there are things that still work, but you have to be aware of the cycle. So you have to know that there is something. If, instance, you are going to try to buy the falling knife for tech stocks, I don't know, could work or could not. So, like I said, the same thing on small caps. There are daily opportunities, and I can't complain. That's why it's better to have a wide range of setups. But I'm also an advocate for one thing at a time. So master one thing and then go to the next one, rather than try to catch three rabbits and you are going to miss all of them. So
Yeah.
yeah, it's a never ending process. You have to adapt always. Sometimes the market is so smooth, and you get so much grip and you're confident, and then all of a sudden it can shift and take some losses, and that obviously can crush your confidence. But I think as a traders, we have to always be aware of that and keep risk in control. That's basically the job, managing the risk. Either it doesn't matter how where you put it, it's managing risk.
There's a lot of important information there, and I just want to sort of recap it. I think it'll be great for people to consider. So you talk about the importance of cycle and cycles repeating themselves. And I think that's something that an experienced trader can pass along to other traders, which is remembering the importance of cycles. So certain setups that might have disappeared after 2020, as you mentioned, they might come back at a later time. And so developing that could be important for traders to keep in mind. And also, you talked about different setups. And so I wanted to ask you what your favorite sort of setup is. Do you have sort of a plus setup after, all of the breadth of experience and knowledge that you have? Is there one particular setup that you look for more than the others?
Yeah, absolutely. So usually I'm looking for not necessarily gappers for instance, I'm looking for stocks that run something between 60 and 100%. So one recent example is ISEE, so which basically run like 100% in few days. So an A plus would be something that it's running like 70, 80%, and then the next day it's gapping up and then squeeze in the first 30 minutes. And I would say that that's the A plus for me. And usually I'm not in a hurry. I'm trying to avoid this fear of missing out. Obviously, from times you get it, but so nobody's immune to that. But the thing is, to have this patience to wait a little bit until people getting worn out, and then wait those imbalance points where the momentum could shift. So I would say, like I said, something that is gapping or it's running something towards 100%, and then it's putting some topping action, and probably the sweet spot would be something 10-30 for the flipping a tape and take advantage of the fade if you want. So that's an A plus for me. So or it's gapping up overnight, like I said, 60, 100%, it's same thing, and then had a squeeze. Usually these low floaters that are gapping up so much, they are driven by newsletters or a fluffy PR. So if you're aware of the driver and then you see the price action, you can position yourself and get in a good spot, And obviously, if back in the day I would have hold it for an all day fader, these days I'm recycling more and try to trade around the core. So if it's having a violet fade into 10:30 or after 10:30, let's say, I'm covering some, and then sometimes I get the pops or sometimes not. It's just going to fade. But basically, I'm trying to squeeze it as much as I can out of these trades, and always try to be aware if the stock is going to play some games, like for instance, CMRA yesterday was a tricky one, started to squeeze late in the day out of nowhere, but there were signs during the day that it should have faded. So every time I have this, if I'm shorting something and it doesn't really behave the way I want it or the way I see it unfolds in a perfect scenario, I'm always trying to think, okay, what's the game here? I mean, what the market maker wants, it should have been done by this time. Why it's holding? Why? So you have to be, but like I said earlier, if you are driven by emotions, and you are in tights, all you think is, okay, I'm just going to get out. If there is a specific level it's going to be reached, I'm going to get out, and many times market makers, that that's their job, to hit the stops. And that's why you see those weeks and then violent stuff, they just shake the tree and then it's gone. Obviously, if you get back in, it's already, you ruined your average, you took a loss and you ruined your average. So sometimes it's going to play games and squeeze it again. So it's going to mess up your head. So you have to be, it's easy to be said and done, but if you're sort of systematic and okay, I missed this trade, that's fine. Next one, But if you have this fear of missing out, oh no, I'm just going to slam it, be it. And then it's starting to squeeze, you're in a bad position. I should have stayed out. So it's always this type of behavior if you are not balanced emotionally. So I think that's a good aspect, and probably something that helps with good emotional balance is a good sleep, maybe doing some sport, whatever put you in a good place, like being stable and balanced. I don't know, if your pulse is rushing at the market open, probably you are not in a good spot. So I'm always trying to check myself, I'm stressed, I'm not stressed, I'm angry, I'm not angry. It's a long checklist if you want, but I think after a while, those traders that have a little bit of experience, they start to know themselves, the strength, the weaknesses. So it's much easier to adapt and to not get in tights every time the price is not going, in your favor. So sometimes if it's part of the plan, many times, look, sometimes I'm shorting the front side. That's fine. Some people short only the back side. That's fine too. Personally, every time I'm shorting the front side, I'm not going full size. I'm just dabble, seed stuffing. And then when I say, okay, that's the back side, then I'm just going to full position. So it's never full position front side. That's stupid. So I avoid that. But I'm also fine shorting the front side, but it's not going full retard if you want.
This is very interesting that you mention keeping in mind one's own psychology and being able to separate. First of all, check in on oneself to make sure: am I mad? Am I calm? Is my heart racing when I get into this trade? To check in on oneself in order to preserve the mental capital, if you will, and not allow yourself to get stopped out of a trade just because, as you mentioned, a market maker might be hitting their stops and sort of playing games. So I think that's really important for traders, whether they're new traders or even experienced traders, to keep in mind. And so thank you. I think that's really important. The other thing, too, that I think is interesting is how you mentioned like you will just maybe dabble in a trade and not go full size. And so you might just get started and that might help you keep something on your radar. But, you're waiting for that backside to hit. And so my question is, from your standpoint, what are you looking for in helping determine what the backside might be? I think people might be curious about how to find the backside.
Yeah, the backside, it's basically when a stock that it's grinding, and it's pushing towards new highs, and then it's kind of putting, some people use trend lines. I'm not into trend lines. You can see it clearly that it's a trend, right? So yeah, it could be a first sign of the backside once it's breaking that trend line. But I'm not using trend lines. I'm mostly looking at the topping action, see if it's breaking that range that it's at the top, and then more, looking at the how big those legs on the front side were. So once it's kind of breaking and under previous low, then I'm considering adding all pops, risking highs this time. So that's the way I identify the backside. And that's what I'm saying. It's better to wait 10, 10, 30 and to not, obviously sometimes I'm getting early in. It really depends how the market is reacting, how big the gap is. It had some action in pre-market. There was some volume. So there are other factors involved. But in long story short, it's basically when you see that topping action, and if you see that it's stuffing maybe the pre-market highs, it could be a sign, and then it's breaking that topping action. So that's how I identify the backside. So until it's not under that level, I'm not adding backside.
Okay, great. That's really helpful. And I know you had mentioned, 10, 10:30. I'm sort of wondering, is there a time of day that in the trading day that you tend to be more active, or that you're maybe not taking any trades and hand off, hands away and walking away maybe from the desk, or do you trade the entire day?
Sure. No, I'm not trading the entire day. Given the fact that I live in Europe, and for me, market opens at 4:30 p.m.
Mm.
So, for instance, if there are some big runners, let's say previous day, then I'm usually here at 4 a.m. market time, which is 11 a.m. my time.
Mm-hmm.
So I'm watching that 4 a.m. because sometimes there is an edge there. So I have an edge there. If there aren't something that I really like, I'm not interested. But usually I'm here at around 7 a.m. because at 7 a.m., many brokers open up the shop, and there are some weeks that can give you an edge,
Mm-hmm.
like see RMA today. Um, it was one of them. So there are a few key points, let's say, key times of the day when I'm there. So this is the pre-market. There are days when there is action in pre-market. There are days where it's nothing. So if it's nothing fits my setups, I'm not going to trade. So I'm going to wait the open.
Mm-hmm.
And actually early pre-market,
Mm-hmm.
like 8:30, things start to shape up. You can see what the gappers are, what the news are. I'm starting to get familiar, so that's a little bit of routine,
Mm-hmm.
with stock that are moving in pre-market.
Mm-hmm.
And then I'm focused obviously at the open, but I rarely trade at the open. I mostly wait 10, 10, 30 because statistically for me, that's the best time to get involved in a trade. And many times back in the day, I was starting so early, like right out of the gate, and then I got worn out because the stock was keep grinding and grinding and grinding or squeezing into 10, 10, 30 just to cover there,
Mm-hmm.
and then see the fade. So now I'm trying to take advantage of those moves that grind into that um, time of the day and get involved for the backside if you want. So, and usually I'm done by 12 p.m. market time.
Mm-hmm.
Now, um, obviously it was summer. I'm playing with the kids, going
Mm-hmm.
biking or hiking around. We have a forest near here. So it's very nice to step outside and to not, I really don't consider myself a junkie. I used to be, and stay there all day long.
Mm-hmm.
It's not, I'm not making more. Even worse, usually when I'm carry trades in the afternoon, I either gave back give back, or if I'm getting involved statistically, I'm either losing small or not making enough. So for me, it's doesn't make any difference, and it's kind of late in the day. Obviously, I'm not so sharp anymore, so I'm really not. Even though I day trade and I put my swings on or whatever, I'm mostly done by 12 p.m.
Mhm. I think it's interesting that you mentioned, you'll be away maybe at 12 o'clock market time and you'll go out for a walk or a hike. Can you maybe talk about the importance of getting away from the screens? And especially for you, do you find that it's better to give yourself time before you go to bed to just unwind and decouple yourself from the markets? For example, have you ever stayed up too late and then sort of had bad sleep because you're thinking about a position?
Oh yeah, absolutely. So that's one of the things I'm trying to avoid. Like I said, in my experience from all these years, obviously there were times when I was staying in front of computer all session, which is not for me. So yeah, sometimes you have bad days, which really mess up with you, and I think the best way is to step outside, and take a walk, go bike, whatever makes you happy. I don't know, take a ice cream or whatever. So um, I'm always trying to disconnect before I'm going to bed. I'm trying to be, because if I'm staying late in front of computer, and especially if I'm having a not so good day or a bad day, I'm going to be in such a bad shape when I'm going to bed. And I'm going straight to bed because market close at 11 p.m. So I'm going to be stressed or angry, and it's going to mess up my sleep. And this is a vicious circle, because if I'm not going to get a good sleep, tomorrow I'm going to be messed up. So I know that for a fact. And I'm trying to be very on point with sleep, I'm always going to bed early. I mean, not necessarily early, but 10 p.m. At least I'm not trying to look at the screens anymore, like half an hour before I go to bed. So no phone, no laptops, nothing. And then I wake up early in the day, and things start to, um, regular stuff, routine, gym, and things like that.
Okay, great. I think that's helpful just to know that you don't have to necessarily be in front of your screen the whole time to get the best out of your performance.
No, no, exactly. No, no. It's. I think actually it's going to work against you at some stage. Now, obviously, for people living in US, you can stay up to 4 p.m. It's not big deal. It's you have time to unwind even if you have a bad day, because that's the problem when you have a bad day. When you have a good day, it's fine. It's just unicorns, but when you have a bad day and you are angry, you really have a lot of time to unwind until the point you go to bed. But here, not so much. So I'm really respect this thing, and I really don't care. Yeah, sometimes there are great opportunities like big faders. I really don't care. Tomorrow it's another day. Market proves me, and time proves me that tomorrow it's going to be another one and another one and another one. So it's nothing in a big scheme. It's nothing. You miss a trade, so what?
Since you brought up sort of trading in Europe versus US, I wanted to ask on behalf of people who are in Europe looking to trade, what advice would you give to them about trading US stocks in Europe?
Just go ahead. I mean, US market, it's, from any point of view, it's above it. You have better liquidity, you have a lot of momentum, you have a good stock selection. In Europe, everything is more slow, and I do not have too much experience with European stocks, but probably I'm not going to get involved anytime soon. So just go ahead, give a shot. I mean, um, yeah, it's much better from any perspective if you want.
I also wanted to ask you a little bit about Investors Underground and how you first got started with Investors Underground, and your relationship with Nate, and what's it been like for you trading with Investors Underground for all of these years?
Yeah, well, I think, I mean, I not necessarily met Nate. I was subscribing to IU, I think, the beginning of 2012 or something like that. So it's like 10 years. So, yeah, obviously, I was trying other subscription or other services. Um, I was starting with alerts, right? Chasing alerts. I think most of the people starting with chasing alerts. So yeah, I've checked that too. Um, and then I came across IU. I was searching for trading stuff related, and I came across IU, and I said, okay, I'm just going to give a shot. And I really got stuck to it because it wasn't about chasing alerts. Nate was very active, was laying down the plan, um, was very easy to understand at the time. He was willing to answer to any DM I was sending, with questions, and he was working hard. And I still think probably he's one of the hard working guys I know. So he's still very active after all these years, and it's consistent day in and day out. And yeah, he's still here after all these years. So that's say a lot.
Absolutely. Yeah, he's one of the most active traders that I see, not just in the IU room, but also sharing ideas on Twitter, to those
Oh yeah,
who follow
oh
him,
yeah.
and just constantly working and absorbing the market. He does a world class job at that. Um, well, one of the other questions I had was because you provide so much information to the IU community, like the watch lists, trade recaps, weekly videos, and things like that. What has that experience been like for you to interact with the community, and what have you noticed from those who follow what you have to say, who interact with you, and is it also mutually beneficial? Because I know people get a lot from your information. Do you also get something back from being able to provide all of this information to others?
Um, yeah, well, basically, I'm always trying to provide actionable ideas, and um, I post plans in chat uh, daily. Things I'm looking at, and trying to be as helpful as I can. So even though and I'm trying to also um, be consistent with mid large caps, because I think there it's a lot to be learned. I mean, and these days it's much easier than small caps. Is the other way around. I mean, that's the way I see it. And to be honest, on small caps, even though I'm trading them, I'm not really. Sometimes I'm share plan in chat, but I'm not really give specific entries, because the float is small on this. It's getting easy to manipulate. The stocks are always getting crowded if too many people are involved. So I'm trying to avoid, to not get a squeeze, or to not get squeezed. So I'm not, even though I'm laying down plans, I'm not into giving specific entries and exits. It's more like, okay, there's the plan. If does this, that, I'm going to be there. You can take advantage of this and that. So that's mostly what I'm looking for, in order to provide some quality, let's say.
And you do an excellent job with that. So thank you on behalf of everybody in IU that follows what information you provide. I think it's always extremely valuable. And so, what is one takeaway that you would like all IU members to keep in mind and remember about trading in general?
You know, um, take one step at a time, and don't try to, like I said, chase too many rabbits. Try to get familiar with one thing before you get into another, because sometimes it's going to be overwhelming. And also try to cut down the noise, at least during the market hours. I mean, um, we see a lot of different opinions out there. I mean, even if you look in the Twitter space or FinTweet area, um, it's so easy to get seed in your head. So you have a bias and you think that's a good short or a good long. And then someone you probably admire out there, it's saying, oh, it's not, it's the other way around, It's going to put a seed in your head and it's going to mess up your bias. And at the end of the day, probably you've been right. And it would have worked in your favor. But because you listen to other ones, you messed up your plan, you are getting angry and frustrated. So I would say that cutting out the noise, especially during the market hours, if you have a plan, try to respect it, try to trade what you learned, and to not let people get in your head, because it's so easy these days to let people get in your head. Yeah, obviously there are a lot of guys with a lot of experience out there. It's good to review what everybody was saying and take notes, and then try to filter out all this information through your net, let's say, rather than, okay, that guy, it's bigger trader than myself, so I'm just going to listen to him, because sometimes, yeah, I mean, the market is going to do whatever she wants. It's not that I'm saying I have 20 years of experience. It means nothing, I can be good or wrong. It's just the way it is. And personally, I have no problem with that. If I'm wrong, I'm just going to cut out the trade, and that's fine. It's like I said in the beginning, it's our job is to manage risk, and if something it's not going your way, and you just cut it off, you own it. You already knew that what your stop loss should be. Like, you are going to lose $500, 1,000, 5,000. It doesn't matter. If you already knew that and respect that, that's fine. I mean, it's part of the trading routine, let's say.
Well, thank you. I think that's valuable advice. Reduce noise, stick to your plan, manage risk.
Yeah, pretty much. I mean, that was one of, back in the day, I was, always, probably because I wasn't so confident in my thing, I was looking for confirmation from other traders. And I think that's an aspect that many people who are in the beginning of this road are looking for role models, and take everything by word, and they just understand everything in the wrong way. Let's put it this way. So it's good to just be able to respect the plan and not let the things go against you, let's say.
Great. Yeah, that's very valuable. And so, Emil, I'd like to finish off with a lightning round set of questions, quick answers. Is that something you'd be okay with?
Yeah, absolutely.
Great. So, my first question is, what skill would you say is most important for any new trader to develop?
Try to get rid of fear of missing out, and try to narrow down whatever you are watching. It's easy these days to have not. It's easy to get distracted. So the sooner you are going to, like I said, cut out the noise and focus on few things, So learn to focus on few things at a time. So and try to make the most out of it rather than chase everything. You know, some people are good at, some are not. I'm not good. Nate is very good at multitasking. I'm not. I'm personally, and this advice is based on my experience, and um, the less I, less is more. You probably heard that many times, and that's my thing. And I think um, it's good to have few things that are very good at rather than have multiple things that are mediocre. So yeah, that would be the advice.
Okay. And what's the best advice a trader has given to you?
I mean, the greatest advice was let them break their legs and then we step in. I mean, have patience with entries. So again, we go back there with entries. So I think that back in the day, that was the best advice. Like,
That's great
yeah,
advice.
that's a
And
that's a funny one, but that's
yeah.
that's still available up to this day. So
Mhm. Yeah, still
yeah,
relevant. Yeah.
yeah, still relevant.
And are there any technical indicators that you favor in your trading?
Nah, not really. I mean, well, if I'm looking to swing something, I use a few moving averages like 100, 20, 13, and 10, and 200 SMA on a daily chart. Basically, I want to see them that they are getting tight and they rising, and the chart it's building above or below. It really depends if I'm watching something for short or for long. So that I'm not sure the indicators, but other than that, for intraday, for instance, I'm using just price action, tape, and volume. So I'm a price action guy, I would say.
What would you consider to be your greatest strength as a trader?
Bounce back every time the market humiliates me, and there are times like that, and don't let myself beat up. You know, I'm always um, motivated to learn more, to do more. I'm always open-minded. If I see some value in someone, um, I'm trying to reach out. I'm trying to learn that thing. I'm trying to understand that thing, and then see if I can bring it into my trading style and fit it somehow. So I'm always open to see new things and to learn new things.
Excellent. And what's one area of your trading that you would like to improve?
Swing trading, have more patience, um, and sometimes probably locking on more profits. So, but not in this particular order, but definitely swing trading. It's something that I want to get better at in the near future. I see a lot of value into that. So, um, I'm not saying that I'm going to do transition fully into swing, but because I really enjoy this day trading game, but I really looking more into swinging and position trading um, these days.
Okay. And do you favor hard stops or mental stops?
I'm almost never use hard stops. I mean, almost never. I always have mental stop at some certain levels. It's not like at 10 or at 20 or at 50, because usually many people think like that, and market makers stop out those areas. I always have an area I give a little bit of wiggle room. It's just I'm looking at the area I have in mind, so I really want to see how the price is behaving on those areas. It's getting above or it's stuffing. It really depends how I position myself. So that's the way I'm having my mental stops, and I always I use hard stop only if I'm in a position I already locked in something and I really have to leave and I can't babysit my position. So then I'm using a hard stop with a market order. And anyway, I'm looking for my phone or something. I'm always checking in. So I'm not letting a position just doing their thing. But if I have to do it, I'm already locked in probably half, and I already have a hard stop at whatever level, like highs or something like that. Those levels that normally shouldn't be reached anymore. So yeah, pretty much that's the way I see things.
Okay, great. And last question for anybody listening who wants to get into contact with you, how can they do so?
Um, I'm really just in IU and on Twitter at Cuzman E. Pretty much that's the way I can get in touch with the people and the way I'm doing.
Emil, I want to say thank you so much for taking the time to speak with me today. It was an absolute pleasure. I'm glad we got to sit down and chat.
Likewise, Anthony. Thanks for having me, and hope to see you soon.
If you liked this video, don't forget to hit the like, subscribe, and notification bell. Thanks for watching.